Welcome back to Smart Stock Sam, where we cut through the noise and get straight to the money moves that matter. Today, we are diving into one of the most explosive setups in the entire market right now. A company that just demolished Wall Street's revenue expectations by nearly 30%, is sitting on nearly $4 billion in liquidity, has over $1 billion in contracted backlog, and yet almost 1/5 of its entire float is still being shorted. We are talking about AST SpaceMobile, ticker ASTS, and whether this stock is finally ready to explode to the upside after a massive earnings beat. By the end of this video, you will know exactly where this stock could go next, what price targets the smart money is watching, and the one technical level that could completely blow the lid off this thing. So stay locked in, because what is unfolding with ASTS right now is something you do not want to miss. For years, and I mean years, the bears had a field day calling AST SpaceMobile a science project, vaporware a pipe dream, and honestly, you could not entirely blame them. The idea of delivering cellular broadband directly from space straight to your existing smartphone without any special hardware? That sounds more like a Marvel movie than a real business. But here is the thing about pipe dreams. Sometimes they come true. And the Q4 2025 earnings report is the clearest signal yet that the narrative around ASTS has permanently, fundamentally shifted. Let's get into the actual numbers, because the headline figures are nothing short of staggering. AST SpaceMobile just reported Q4 revenue of $54,310,000. Wall Street was expecting roughly $41,900,000. That is a beat of over $12 million, nearly 30% above estimates. Now yes, the bottom line showed an earnings per share miss, coming in at -26 versus the -16 expected. But here is what matters: the market did not care. Investors overwhelmingly chose to price in that top-line explosion because it proves something the bears said would never happen. Early-stage monetization is actually working. The science project is now a revenue-generating machine. So where is this money coming from? If we peel back the layers on the full year 2025 revenue picture, which came in at $70,900,000, we see two rock-solid pillars: Tier 1 mobile network operators and the United States government. These are not speculative partnerships. These are deals with the biggest names in global telecom and national defense. This is not maybe money. This is contracted, institutional, serious money, and it is only the beginning. But none of that matters if the company bleeds out before they can scale. So let's talk about the balance sheet, because what AST has put together here, I am calling it a fortress balance sheet, and for good reason. The company is sitting on a pro forma liquidity position of $3,900,000,000. That is a massive financial cushion that effectively eliminates near-term solvency risk and funds their entire upcoming satellite launch manifest. And it gets better. Their physical assets, property, and equipment grew 241% year over year to $1,570,000,000. They are not just building satellites in Texas. They are building a factory that prints them. The industrialization phase is well and truly underway. And the market noticed immediately. On March 2nd, ASTS closed up nearly 10%, settling at $86.92. After hours, the momentum kept rolling, pushing the stock another 3% higher to nearly $90. This was not Reddit retail frenzy. This was heavy, institutional-grade volume repricing the stock in real time as the street updated their models to account for a company that has crossed the commercialization threshold. But is the move over, or is this just the beginning? The technical picture gives us some serious clues. Looking at momentum indicators, the RSI is sitting at 62.34. In plain English, that means the stock is strong, but it is not yet overbought. There is still room to run. Layer on a confirmed bullish MACD crossover at 0.428, and you have a sustained buying trend with no technical exhaustion in sight. The momentum signals are flashing an active buy. But here is the critical question every trader needs to ask right now. How long can this uptrend hold? The stock is comfortably above its 5-day, 10-day, and 50-day moving averages. Even the Fibonacci pivot level at $84.36 has flipped from resistance to support. But there is one massive line in the sand that this stock has to reckon with: the 200-day simple moving average sitting at $97.24. That is the ultimate test of this rally. Break above it on volume, and the floodgates could open. Fail there, and we might see a healthy consolidation back to the mid-80s. Circle that level. Watch it obsessively. Now let's look at who exactly is doing the buying. The so-called smart money is clearly divided, and that division tells a really interesting story. On the accumulation side, we saw Norges Bank and Vanguard aggressively adding to their positions. Norges Bank alone added over 2,700,000 shares. These are long-horizon, high-conviction institutional players who are not chasing a meme. On the other side, firms like Susquehanna and D.E. Shaw were trimming, taking profits after a volatile stretch. The message: long-term believers are doubling down. Short-term traders are locking in gains. And then there are the short sellers. Here is where things get truly interesting. Right now, 18.02% of AST SpaceMobile's entire float is sold short. That is over 43 million shares that eventually have to be bought back. The days to cover ratio sits at 4.86, meaning if short sellers tried to exit all at once, it would take nearly 5 days of average volume to do it. What does that mean for you? It means ASTS is a tinderbox. One strong catalyst, one surprise announcement, one major contract win, one satellite successfully reaching orbit could force those 43 million shares to cover simultaneously, sending this stock into a violent, rapid-fire squeeze. The spring is loaded. The question is only what finally releases it. And the options market is screaming the same message. Implied volatility is through the roof at 111%. The market is pricing in extreme moves in both directions. But here is the tell. The put-to-call ratio is sitting at 0.50. That is heavily skewed toward calls. The big money is not buying insurance. They are buying upside exposure. Max pain sits around $85 near term. But the open interest picture tells us the institutional bet is on a much larger move higher over the coming months. So what could actually pull that trigger? The definitive ignition event is happening this month. The BlueBird 7 satellite launch aboard the New Glenn heavy-lift rocket is the primary near-term catalyst to watch. Beyond that, AST is targeting 40 microns completed in the first half of 2026. A milestone that transitions the company from a handful of test satellites to a commercially viable, revenue-generating constellation. This is the shift from scientific discovery to global utility. And if you think that does not matter for the stock price, think again. Because the revenue pipeline backing all of this is already massive. AST SpaceMobile is carrying a contracted backlog of $1.2 billion. That includes a recently announced $175 million deal with STC Group alone. The business is no longer speculative, it is contracted. The mission now is execution. Get 15 global gateways online and convert that backlog into recognized service revenue. If they do, the foundation for a multi-billion-dollar valuation is already in place. So how do you actually trade this? Here is the Smart Stock SAM game plan. The current entry zone is between $86 and $87, aligning with near-term momentum and the 5-day moving average. Your downside risk levels are $84.36, that Fibonacci pivot floor, and the psychological support at $80 even. On the upside, our first price target is $95, which is where analyst coverage from B. Riley currently sees the stock heading. If ASTS clears and holds that 200-day moving average at $97.24, the secondary target is the big round number, $100. And from there, the chart opens up considerably. Before we wrap up, I want to give you an important reminder. Nothing in this video is financial advice. I am not a licensed financial advisor, and everything discussed here is purely for educational and entertainment purposes. Investing in individual stocks, especially in early-stage, high-volatility names like ASTS, carries substantial risk. You could lose some or all of your investment. Always do your own due diligence, size your positions appropriately, and never invest money you cannot afford to lose. With that said, here is the Smart Stock SAM final verdict. AST SpaceMobile has delivered a convergence of signals that is genuinely rare. A massive revenue beat validating the business model, a fortress balance sheet with $3.9 billion in liquidity, a contracted backlog of over $1.2 billion, relentlessly bullish institutional accumulation, and 43 million short shares sitting on a powder keg. Yes, the price-to-sales ratio at roughly 145 times is elevated, but you are not paying for today's revenue. You are paying for early-stage industrial scaling of what could become a generational global utility. The $84 to $85 zone is your critical base. A clean breakout above $97.24 is the true signal that the long-term bullish cycle has begun. AST SpaceMobile is no longer a what-if, it is becoming a when. As always, stay objective, respect your risk, and I will see you in the next one. Smart Stock Sam, out.